Hello and welcome to LeasePal and its revolutionary new deposit exemption insurance policy, which is going to eliminate security deposits from the apartment rental business. We're about to change the industry and make rental apartments more profitable for property owners and at the same time more affordable for renters. Now, it sounds impossible to do both, but you don't have to take our word for it. We have expert white paper analysis from Larry Boyer, the nationally known housing economist. He spent 5 years at PricewaterhouseCoopers and 9 years at Freddie Mac as the principal economist. So he is an expert on analyzing the U.S. rental housing market. And his 3 white papers on LeasePal's deposit exemption insurance policy validate the additional net operating income, or NOI, for property owners who convert to LeasePal, the subsequent increase in their property values, and the substantial reduction in the amount of cash that renters have to pay to move in. So here's how it works. On move-in day with LeasePal, renters no longer pay first, last, and security. Instead, they pay the first month's rent only, plus a one-time LeasePal fee in the amount of a half a month's rent. And we use that fee, among other things, to pay the wholesale premium on a LeasePal deposit exemption policy for the renter, which is simply an insurance policy where the property owner, not the renter, is the named insured beneficiary. And that policy eliminates the property owner's need to collect and manage security deposits and last month's rent deposits, because the policy covers the property owner for up to 6 months' rent on all tenant skips, tenant non-pays, and tenant damage, which is well beyond the limits of what 2 months' worth of deposits on an individual apartment would have covered. So the owner is far better off with a LeasePal policy versus deposits from both a risk and a cost perspective, and the policy costs him nothing because it's paid for by the tenant. But that's not all. LeasePal also pays the property owner and the owner's on-site leasing agents a cash subsidy on every unit protected by LeasePal, which not only boosts the owner's revenue, but also increases his on-site agent's income, thereby reducing the owner's leasing agent turnover. LeasePal also eliminates all of the property owner's costs and legal obligations on collecting and managing deposits, which for a major owner with 10,000 units is more than $1 million worth of deposits to manage at any given time. And let's talk about what the renter gets. At a LeasePal property, the renter's deposit-related move-in cash requirement is reduced by up to 75%, from 2 months' rent for security deposit and last month's rent deposit, down to a half a month LeasePal fee. That's up to 75% reduction in the amount of deposit-related upfront money the renter has to come up with just to move in. And that's going to make LeasePal apartments more affordable and more desirable than apartments that continue to collect 2 months of deposit. That advantage alone, according to Mr. Boyer's analysis, will increase occupancy and property owner NOI, which in turn will increase property values for the owner. Now, the LeasePal business model is simple and very profitable. On the front end, it's just a sales business, which makes it a pretty simple equation. How many owners can we convert to LeasePal? How many of their residents will vacate each year and be replaced with new residents who buy LeasePal to avoid paying deposits? And what's our profit margin on a new policy? Line 1 shows a rental rate of $22.50, which is the current average monthly rental rate in the U.S. Line 2 shows the renter's one-time payment of a half a month's rent for LeasePal, which would only be $11.25 of additional move-in expense for an average apartment that rents for $22.50 a month. That's a big savings for the renter, and it pays for the renter's LeasePal policy that protects the owner for as long as the renter stays in the apartment. Lines 4 through 7 are our direct costs on a policy, the biggest of which, in line 4, is the one-time wholesale premium we pay a major insurance carrier to underwrite the deposit exemption policy, which according to the third-party actuarial analysis has to be 48.4% of the lease-pal fee paid. So in this example, it would be $544 right there in line 4 that we have to pay to whatever A-rated insurance carrier is underwriting our policy. Line 5 shows our cost of $223 after commission to also provide the renter with a 1-year renter's insurance policy, which we bundle as part of the LeasePal new renter package because it's required by most property owners anyway for move-in. Lines 6 and 7 are fixed fees we have to pay for underwriting and admin. Line 8 shows the subsidy we'll pay to the property owner and his on-site leasing agents for every unit protected by LeasePal. Line 9 shows the commission we'll pay to our own in-house licensed insurance agents who actually sell the policies to the renters, along with the non-insurance commission we'll pay to our outside sales team for convincing major owners to stop collecting deposits and convert to LeasePal. And line 10 shows the referral fees we'll pay to the various apartment associations across the country that have signed up to provide us with property owner leads, introductions, and endorsements. And that brings our total direct costs on a new LeasePal package there in line 11 to $972. We're selling it for $1,125. That gives us a 13.6% gross margin just on the front end sales side of the business. Now, add to that the $156 of gross profit we make on our $169 membership renewal fee, which has to be paid annually by renters who renew their lease and want to maintain their deposit exemption policy for another year, plus the $84 worth of pure profit we make in straight commission when renters renew that renter's liability policy we gave them in the first year, which again is required by the owner. That gives us an additional gross profit from first-year renewals of $241 and brings our blended profit margin on a renewing LeasePal apartment up to 35%, which is a solid margin, but there's even more profit down the road because of our insurance structure. So instead of us going out and buying an off-the-shelf policy from an admitted carrier, we've already set up our own captive reinsurance company so we can insure our own policies, but in the early years, we can essentially rent the necessary licenses and infrastructure from one of the major carriers that offer what's called fronting services for a fee. And this fronting structure offers LeasePal and our investors 3 big advantages. Number 1, it puts us in business instantly without having to have hundreds of millions in capital and without having to wait years for regulatory approval to become an admitted carrier. Instead, we just sell our policies through the fronting carrier for a fee. Number 2, it gives our policy instant credibility because the fronting carrier's trusted name appears on the policy as the underwriter responsible for paying claims, which they pay out of the premium that we pay them for the policy. And number 3, after 2 years, any excess surplus money set aside by the fronting company for catastrophic claims will be released back to our reinsurance capital account and can then be dividended back to LeasePal's capital account and eventually booked as additional gross profit for LeasePal. So when LeasePal, the sales company, pays that $544 cost up there in line 4 for the policy premium, we're not paying it to some off-the-shelf policy provider. We're paying it instead to our fronting company, who uses it to pay claims and pay their fees, but who also sets aside approximately a third of it, or $190, for 2 years for any excess or surplus claims that might incur. And when that liability on each policy expires after 2 years, any of that excess loss reserve money that hasn't been used will be returned to our captive's capital account and can then be dividended back to LeasePal Inc., which will add as much as $190 back into our per policy gross profit, assuming the third-party actuarial analysis is correct. and that can raise our effective gross margin to more than 50%. So, bottom line, LeasePal is a great deal for property owners in terms of increasing NOI and property values, and it costs them nothing. It's a great deal for renters because it reduces their deposit-related move-in cash requirement by up to 75% and gives them renter's insurance without a monthly premium. And it's a great deal for LeasePal and its investors because we get long-term recurring revenue with a blended gross profit margin that we believe will be more than 50%. There are 21 million Class A and Class B apartment units in the U.S. turning over their residents at an average of 40% per year, with the remaining 60% of residents renewing their lease. So our target market for new policies consists of the 40% of those units, 8.4 million, that turn over every year. And our value proposition is a no-brainer for both sides because LeasePal creates happy owners and happy renters. Happy owners who have no more deposit management and legal expense, no more bad debt expense, two new revenue streams, lower insurance payouts and lower insurance premiums, and of course the big ones, higher occupancy, higher NOI, and higher property values. And we have happy renters who are more motivated to pay their rent because they're able to move in for less cash and or they can afford a better apartment, who end up with more cash in the bank and better credit, who have good renter's insurance covering their belongings and their liability, and who don't start out in an adversarial relationship with the property owner for wiping out their bank account at move-in. There's no downside here, only upside in replacing security deposits with LeasePal. And think about this. We only have to convert 100 major owners, or about 2 owners per state, to generate $600 million a year in recurring LeasePal revenue, a $7 billion valuation if you calculate a PE of 25, and a 17x return on our investors' money. That's converting an average of just 2 major owners per state. If LeasePal becomes a phenomenon, as we think it will, and we're able to convert 4 major owners per state, we'll completely dominate the market with a 12 market share for that 8.4 million apartments that comes vacant every year. We'll generate more than $1 billion a year in revenue, a $14 billion valuation, and a 34x return on our investors' money. Now, we've already raised $6 million from the founder and our Series A offering to set up our insurance structure and become licensed in all 50 states. And we're now in the process of raising $140 million more to quickly dominate the market. As much as half of that money will have to be maintained in our reinsurance company's capital account early on to satisfy regulators. But remember, as we build up our cash on hand, a substantial chunk of it can be dividended back to LeasePal, Inc., and eventually dividended out to our investors. The other half of the money we raise will be spent on first-year salaries and on our direct sales push strategy to major owners and our consumer pull strategy, where we do TV, radio, and online advertising to educate consumers and pull them in to LeasePal properties. So we'll have the push strategy to get owners to implement LeasePal versus collecting deposits, and the pull strategy to get renters to ask for LeasePal when they're looking for their next apartment. Our exit strategy is an IPO in 5 to 7 years, unless we get a compelling buyout offer before we IPO, which, given the size and financial strength of the players in the industry, is very possible. The current offering is a Reg D 506C at $7 a share with a pre-money valuation of $275 million. As economist Larry Boyer said, deposit insurance is going to cause a multi-billion-dollar change in the apartment rental business. And at LeasePal, we've already laid the groundwork to be the first billion-dollar insurance company in the industry. If you act now, you can participate with us in dominating this market. Every single person listening to this presentation now buys insurance for their belongings, for the trips they take, the vehicles they own, and the cars they rent. But they didn't used to. They used to have to put up big deposits to be covered until the insurance model changed everything. Apartment rental deposits will be the next big thing to convert to insurance, and you can profit from that changeover early on with LeasePal. So please get back to us and ask for a private placement memorandum and the white papers and lock in your investment, because as soon as a major funder steps up, the opportunity for individual investors will be gone. Thanks very much for your time, and we look forward to talking to you.